Hello, traders, and welcome back to another episode of Market Skycast, Blue Sky's official podcast. We are in week 4 now, and I really feel like the coaches and I are getting this down. So I'm excited to see the future for the podcast. Before we get started, I just want to mention that we are running a crazy sale. If you are thinking about joining Blue Sky as a trader, we have launch plans, and with the code WELCOME26, you can get started for under $30. That's right, under $30 to get started. And we also do flash sales. If you join our Discord server, that is the best place to see our sales. They drop randomly, so keep an eye out. And you can get pinged anytime a promotion comes out. Just make sure to sign up. Now, welcome back, coaches. Becky, Riz, we missed you last week. Welcome back, brother. And last but not
Thank
least,
you.
Coach Matt. Now, what I always like to do at the beginning of the show, last week, we made some predictions. We talked about some economic data, we talked about the political climate, and we talked about earnings. Now, I don't know about you guys, but FOMC was very interesting for me last week. And Becky, you were the one who talked about it. You have this FOMC. What stuck out to you? Did something not stick out to you? And what did you do with the reports?
Well, it was my least favorite, I'm not gonna lie. I felt like having FOMC, which I don't think I gave enough weight to in thinking about it ahead of time, but having the earnings, important earnings coming after market close on the same day as FOMC meeting and rate adjustment was, I think, potentially a factor because the candle sizes, the volatility was small comparatively, and it was unimpressive. And I was kind of annoyed, to be honest. I was live streaming with many of my very favorite people, aka Riz and Matt. And I just thought that I would have a sicker move. And, I did win, which I'm happy about, but it was not the same. What I love to do is the time opportunity trade. And so when I like to trade most is not right at 11 when the news first hits and the event starts, but rather once Powell gets into his speech and around between 11:35 Pacific Standard Time and 11:45, I often will see a pivot in the market, which is something that I back tested and studied and really enjoy the opportunity. And so for me, I did see this on Wednesday when the market gave some bullish momentum and then was sliding back down and then gave a pivot candle on the smaller time frames around that time. I did go long and I got in as it was holding. I scaled in as it went up. I was scaling out. But honestly, I thought my P&L would have been a little bit more substantial had it taken off and my higher targets been hit, but it didn't. It was kind of muted and a little bit lame, and my runners got stopped out. So overall, strategy worked, but it was not, the home run that I love. However, I'm just grateful to have this back tested strategy that works more than it doesn't, and to be in this opportunity to capitalize on these opportunities. But yeah, it was not as impressive as I hoped. Not gonna lie.
Now, I know we talked about how FOMC was probably going to be a non-event. Expectations were there. Everybody kind of agreed what was happening. So, did you expect this, contraction or consolidation, or did you think it was going to actually move?
I thought it would be more than what it was. I wasn't hoping for some crazy outsized move, but honestly, the VWAP held it down. And to be honest, more often than not, the FOMC moves will at least take out VWAP at least a time or two, even if it doesn't stretch the extremes of the price action. So I thought it would be at least a little bit more than it was.
Yeah, you know what? I was watching it in the first 3 minute candle. I think it was maybe 20 points, and we didn't leave that till the time when your strategy kicks in 45 minutes later. And I
Yeah.
don't. It's been a while since I've seen that, so I was kind of surprised.
Mhm.
Now, Matt,
It
question
doesn't
for
do
you
it. It's
because we
been
talked.
10 years since it's happened. It was so boring. It was a snooze fest. We had more volatility on Christmas. Like, it was absolutely ridiculous. I cannot believe the algorithms didn't want to actually participate and party. And you're absolutely right, Justin. Everybody here thought it was going to be a snooze fest, but that doesn't mean that the rest of the market was thinking that. Like, it was unprecedented low volatility.
Mhm.
And it was just wow. But I will say we did get the purple tie correct.
I was my follow-up question for you. Did you make your bet on it?
Of course I did.
There we go. I love that.
Yeah.
Now, Matt, you mentioned last week that FOMC was probably going to be a non-event,
Mhm.
and in a perfect world, FOMC is the driver of the market and one of the most important
Absolutely.
things. But we did have some very important earnings
Yeah.
last week. Were you surprised by any of them? I know it was some big tech.
Yeah,
I think you mentioned Tesla actually
Meta,
beat, I think.
Tesla, Microsoft. Tesla quietly beat. I was expecting a
Yeah,
miss on that one, and they beat by a good healthy portion, 11% on their beat. And I'll talk
which is
about
over
that.
seven.
Yeah, here in just a second. But Becky's right. When you're talking about the Fed, the Fed's always going to be the number one participant in the financial world. But there was a lot of expectations they weren't going to do much. We're kind of coming into the last of Powell's tenure, and I just kind of feel like he's in his swan song here. And the reality is, when you have an expectation where you're not going to see much, and you got major catalyst on deck, right, like in an hour from when they reported. Yeah, I just kind of felt earnings was going to play the role there. One that really pleasantly surprised me was Lam Research, LRCX. Lam Research pulled off the hat trick, had a wonderful earnings. The only flaw here is they're living in overextension, and so probably secondary patterns play. But Lam Research was quietly a winner. Meta was a rock star on their earnings here this week. Meta came in above expectation on everything, including guidance, which they raised by 7.5%. They were a rock star. Microsoft was the dog of the dog of the dog, and they're trying to recover off a gap down, but Microsoft's numbers were fine. I mean, they came in with a 3% beat against EPS. Revenue was fine, in line, but the problem was they missed on Azure growth, and Azure is all growth out of Microsoft. And when they miss on that, investors punish Microsoft, and that's what happened here. And so Microsoft was a dog, Meta was a winner, and then kind of to split the mid was the Tesla baby child. And basically, Tesla came in with a very impressive beat. And they also simultaneously said, we're not going to do anything that allowed us to do an impressive beat. And what I meant by that was they're doing a major shift from their legacy car manufacturing business. They're putting that on the side burner, and they're even stopping production on the Model S and the Model X. And they are shifting full force, full throttle. I think we like to call it full port here at BluSky, into robotics and automation. And Wall Street's gonna say that's a bad, because the legacy car manufacturing business which allowed Elon to build the juggernaut. I think it's a smart move. I think it's the right move. I think Elon is a visionary, and he sees the environment moving into the next 5 to 7 years, and it's tough to find growth out of EV right now. Elon's got to make money through credits with EVs. Now those credits are gone. He's going to growth. AI robotics, AI infrastructure, AI hardware, and he's putting Optimus on scale. So I thought context was really what was important here on Tesla. But yeah, Meta was a winner, Microsoft was a loser, Tesla was the context, but they kind of offset one another, and that's why we got a doji in the market here.
Yeah, I love that comment about Tesla and Elon, because ever since I've been following, he plays a long game. So if he's making a move on this, like, he's not trying to make money tomorrow. He
Well,
wants to be the leader in this in 5 to 10 years, and that's
and,
great.
and I don't want to stay on this point, but you think about people like Elon, people like Bezos. Let's take those two, Elon and Bezos, both juggernauts, both billionaires, both leaders of massive corporations, both visionaries. One seems to be getting into his older age and kind of just leaning on his legacy. The other one seems to be getting up there in age and doubling down on his legacy. I'll take
Great
the
point.
doubling down. I'll take the doubling down, and that's Elon. Jeff Bezos kind of just like, I made Amazon, I did Amazon. Now I just want to walk around with shiny objects and get pictures. Elon Musk is like, you know what? I'm going to take a risk and not do the legacy car manufacturing business. Wall Street's going to hate me, but I'm going to double down on the $5 trillion infrastructure build out in robotics and automation, and I'm going to be the leader in that race. That's a visionary. Compound gains into something else. He just does it at a historical level that nobody else has ever seen. So I think there's a lot of value in what Elon's doing. And if you kind of remove yourself from the Elon circus a little bit, I think this is a very good decision for Tesla.
I have to agree with you. Doubling down, going for the long game. Now, Riz, you weren't here last week, so no bold prediction for you. But I want to ask you, Thursday, the market sold off, I think, 700 points. Were you surprised by that? What do you think the drivers were, or do you think it was just pure price action? And
Well,
I'm
I
talking
think
about
with
NQ, by
the
the way. By the way.
yeah,
I was
yeah,
hoping not the ES.
absolutely.
Oh, that'd be crazy.
No, not the S at all. It was more of the Nasdaq.
Yeah.
You know what? It looked like a lot of delayed price action after FOMC. You know, again, going back to the conversation we had 2 weeks ago, which is all earnings based, movements in the price market. So we're seeing that again occur now that, you know, the market already knows what the Fed is going to do. The Fed is not deviating from that plan, and they're sticking to it very, very strictly. So the only other thing that we have to rely on is the earnings plays that are happening. We had Apple today. Apple had record sales on their iPhones. They've got some great growth in China going on. So maybe we'll see something, some other movements, and that affecting the market in an upside, and maybe even a rebound. So I think that's really what you're seeing. You had a little bit of sell off with Microsoft, the prior day, so that also contributed. And there's also some hesitation in the market due to tariff discussions. So there are some ongoing talks that are kind of spooking the markets for the time being. But I think the coming week, the coming week is going to be a lot better.
Nice. That's a great answer. A lot of things contribute to it. It can't just be one. Now,
Mhm.
next we are going to look at the coming week's economic data, geopolitical climate, and earnings in a segment where we are just watching the market, and this is exactly what us futures traders need to know going into next week. So stay tuned. All right, welcome back. In this segment of Market Watch, we are going to go over the economic data, geopolitical climate, and earnings for the week. Whatever the coaches think is most important, this is what you need to know. Now, we're going to start with Coach Riz. What are you looking for this week, and what are you going to do about it?
Well, what an interesting week. We're talking about earnings, but there are also important economic numbers going to be starting off this week. Starting off today, Monday morning, we've got S&P Global Manufacturing. We've also got ISM manufacturing numbers. Those will be happening in the pre-market. So it'll be early that if you futures traders, you'll need to get up, quite a bit earlier, maybe even 2 hours before time if you're going to try to catch that trade. Now, going into Tuesday, we also have JOLTS, followed by Wednesday, we've got S&P Global Composite PM. And then Thursday, here's a really kicker that I think is going to be really important. That's jobless claims. We've got jobless claims coming on Thursday. And then Friday morning, we've got non-farm payroll. That's also going to be early in the morning. So I think this week, it's going to be early bird gets the worm. You're going to have to be in early, look at those levels and try to navigate the waters, try to get into the position early so you're not just chasing or react, following it.
Is there anything specific you're looking at, or will you be up early actively trading this, trying to be in a play before the news comes out?
Oh, I'm going to try to be in a position prior to the news so that
Mhm.
I can at least have my stop in the money already. And that's where getting in, waking up early and starting your day early is super important, especially on news-driven event days. So, being in tune with what those key dates of information that are coming from the Fed and being able to align your schedule to it. But of course, this leads into another topic, which is when can you trade as a trader? But we can talk about that later.
Oh yeah, we could do an hour-long segment about that very, very easily. No, that's a good point. Early bird gets the worm because if you can catch a position, put your stop in profit, and maybe catch a trend, you can hold that position all day and just trail your stop loss. And maybe that's the only day you actually need to trade for the week. And as traders,
Definitely.
less time on the screen. If you know you have your profit goal for the week already made on a Monday or Tuesday, oh my God, it doesn't get better than that. That's great. Now, Coach Becky, what are you looking at for this coming week?
Yeah, I definitely think that all of the news events that Coach Riz mentioned are on my radar. And for me, a couple of those are half an hour into New York session, which is prime trading time for me. Oftentimes I am in position or actively looking for out of a position. And so I definitely want to make sure that I'm kind of watching myself and know when those are coming. So, watch this calendar, you guys, and put that into your morning plan because you don't want to be caught with an unprotected trade ever. But especially if there's going to be a higher volatility during your trade time, you definitely want to make sure that you can ideally have your shot moved into profit or have your trade close before that happens. But the biggest one I think for me on this would be that Friday unemployment, the monthly unemployment rate that releases every Friday pre-market, an hour before New York session, because that one is the one that is, for me, is in top three of the economic calendar news events that happen every month or 2 months, because that is a little bit bigger of a number and a statistic, and it has been slowly climbing over the last several months, and so that is technically not an ideal direction for our economy. When unemployment numbers climb, that is not as great for the humans that are unemployed. So for me, that is something to factor in terms of, it could be a data point that could make we could be waiting to hear that information. So that for me on this week is the biggest one, is that Friday.
Nice. Now, okay. So I know 2 out of the 3: FOMC, unemployment. What's the third one?
CPI.
CPI. Oh, who could have guessed that? Awesome.
Big three bosses.
Now, I have a quick question. Some of this news comes out at 8:30 Eastern. Some comes out at 10. Do you have a certain strategy where you wait X amount of time if you're not already in a play for those kind of news events, or is that strictly for FOMC?
The top 3, I trade very intentionally. Either I abstain or I have a specific strategy, such as with my FOMC strategy. Unemployment news is it's an hour before market open. It's not my preferred time. It's 5:30 a.m. for me Pacific,
That's
so
true,
I'm not
yes.
as into that. But the 7 a.m. ones are exactly right in the heart of my normal trading time, and so I definitely factor those in. And I have to really feel good about a trade plan. Like I need to be in an A+ setup with a stop that I'm fully stand behind in order to hold a trade through that. But on those days, sometimes if I see a great setup before it hits, I will engage in it, and maybe the trade is done or my stop is protective. But if I don't see an A+ setup before then, sometimes they'll wonk around ahead of that news events half an hour into market open. And so I will wait and see, let that print, give it, a solid 60 seconds, a full minute to whip a little bit, and then I'll see if my setup presents after the fact, because then I don't have to weather that volatility and risk getting stopped out just for my trade to actually work, and have it just be that volatility variability that took me out, not necessarily that my trade was wrong. And so that has frustrated me more than once in my morning trade sessions. And so now I either has to be an A+ with a good stop management, or I wait till after.
Beautiful. And I know Becky is our resident psychology coach, but she is also an amazing trader. So if you want to learn about any of these strategies, ask her in her stream, shoot her a DM. She is more than willing to help. I know I bugged the hell out of her, so it's fine.
I will.
And now, Matt, I know I can 99% with certain guess what you're going to talk about. But what are you looking at going into this week?
Well, nobody's going to have a job in 5 years when Elon's right on the robotics and automation evolution. So labor market numbers are going to become less important over time. But Becky's right. That is the current order. It goes FOMC labor and then CPI. Everything else is a nothing burger with those 3 juggernauts from an economic reporting perspective. But, it's Labor Week, and Labor Week's always going to be a little bit more important economically than others. Obviously, the world would like to see low unemployment. The market oftentimes wants to see higher unemployment so we can get free money, called quantitative easing. But that's a different conversation. Justin, you're absolutely right, 1,000%. Looking at the earnings landscape, these are the 2 weeks. The week that we just came out of and the week coming at us are the 2 biggest weeks in earnings season. You after this, it's just kind of trickles in, and there's still some very important companies, but you got 103 companies in this previous week reporting earnings out of the S&P. This coming week, you have in the S&P 500 127 companies. And so it's an earnings landscape. It's an earnings conversation. And you have juggernauts out there, from Google and Amazon to Eli Lilly, which would be the 8th wonder of the world, also known as the 8th Mag 7 stock in Eli Lilly. But even outside of that, some very, very important AI names out of AMD, Palantir. You have Qualcomm down the road. You have very important healthcare companies next week out of Pfizer and Amgen. You got consumer staples out of Philip Morris and Pepsi. You got representation of every sector next week. And so it's got to be an earnings. But if I'm looking at one earnings report that I think is just absolutely more important than others, it's Google, and it's because of what they represent to the AI, what they represent to the growth engine of the S&P 500. But we're also starting to see a lot of speculation on the next generation of ChatGPT 6 should be announced at some point in the quarter. We'll probably get another announcement out of Grok on the quarter. And Google better not be too far behind on Gemini, or they're going to be at the behest of some of those other announcements. So I am interested to see what are they doing. Obviously, Google's going to beat, but what are they doing on what are they doing on the guidance side of the equation, and what are they doing on CapEx? Is there any announcements that they hint on Gemini? Like, I just feel like they're going to be the most important one, but they're not the only one. But definitely it's the earnings landscape next week that is interesting to me, because that labor market report this Friday is going to be a good trading session, but it will have absolutely nothing to do with what the market is doing in a month and a half from now. These earnings reports will have absolutely everything to do with what the market's doing in a month and a half from now. And so one's a next week conversation, the one's a next quarter conversation. And when you're thinking outside of day trading and you're taking into account investing as well, I do think this earnings landscape is very, very important next week.
Yeah, absolutely. And I think as an NQ trader, I think this week sets a tone. Are we hitting all-time highs, or are we going back into range? What do you
You
think
got
about
some very aggressive growth stocks on the deck this week. But
Yeah.
Google obviously, but AMD and Palantir, those two are high
Right.
flyers, like big time high flyers. So very
Absolutely.
fascinating. Oh, throw Qualcomm into that mix too, like very important company. So I'm right there with you. I think it's a make or break week for whether or not this recovery that we saw in the back half of this week, can we propel that into a breakout and a leg in the markets? I think it's going to be based on whether or not we get a positive earnings landscape.
Love it. So that wraps up our Market Watch segment, and we are leading into what actually might be my new favorite segment, where we interview a real life BluSky member. Last week we had LP. Stay tuned to see who's next. All right, welcome to our trader interview segment. Today we have a special guest, Affluent Mind. Now, if you are in the Discord server, if you watch the live streams, he is constantly active, giving advice, showing off some massive P&Ls. So I am excited to have him on here. Now, do you want to give everybody just kind of a quick introduction of yourself and maybe what got you into trading?
Sure. Thanks, Justin. Again, I'm a Fluent Mind. I'm in the Discord regularly. I actually started trading when I was a child. My parents got kind of sneaky. They wouldn't let me play video games like the other kids. So they got me an Apple computer. I'm a little bit older than a lot of people in the Discord, but and one of the games that they got me to play was the stock market game that teaches you how to trade options, equities,
No
future,
kidding.
all of that type of thing.
How
And
old were you during
I
that?
was 8 years old, and
Wow.
object of the game was to see how fast you can become a millionaire without losing everything you have.
That's awesome.
Yeah. So I learned that, and that kind of got me interested in finance. So I started going to school for finance at college, and went over to Europe and got a graduate degree and master's in finance.
Oh, cool.
Started working for some banks, and went from there.
Okay. Now, I didn't even know that game exists. I'm gonna have to get my kids on that when they get, old enough. That's amazing. So you just took it and ran, and when you were working for firms, were you trading their capital kind of thing?
Initially, I was just working as an analyst, a financial
Okay.
analyst, and then they had some kind of a contest within the bank
Mhm.
for traders, junior traders, and I took a chance at it, and they called me the American cowboy that trades by the seat of his pants.
So we got the American cowboy, and then we got the Wall Street cowboy and Mike. Oh, I
Yeah.
love that. Oh, that's funny. Now, were you trading back then? Were you trading options strictly or equities?
That was crude oil futures back then. That
Okay.
was what they had in to trade.
Oh, very cool. And were you trading futures on your own at that point, or were you even allowed to?
No, I was just trading for the bank itself on their books, but I
Okay.
didn't really start trading for myself until I came back to the States.
Okay, very cool. So this is interesting because you said you started, like trading at 8 years old. Most people, it's been like the last 5 years. So This is kind of weird. As a child, what were your biggest hurdles becoming profitable on the video game?
Well, first I had to figure out what options were and how
Yeah.
they work, and they
Uh,
threw in all the spontaneous news announcements like a real world scenario,
oh,
like
wow.
which can cause you to go broke in seconds. So they had all that stuff wrapped up in the game, and I got really interested in that, and I
Mhm,
struggled with risk management.
mhm.
And so I kind of took a step back from it because I kept blowing the account, like a lot of people do, you
Yeah,
know.
yeah, of course.
And as a kid, I got frustrated, so I just took a step back and just focused on mowing lawns, and came back to when I got to college.
Oh, that's hilarious. So, were you actively trading in college too?
I was, yeah.
Okay. Would you
I
say
took,
you were making money?
oh yeah, I took
Okay.
the money I made from mowing lawns and transferred that into a good amount of money and started investing in other things and
Oh,
just
very cool. So at this point, you're consistently profitable. Is there any systems in place or any mindset shifts or just anything that you think kind of pushed you over the edge to stay consistently profitable rather than, I guess, like years before where you were just consistently blowing accounts?
I would say releasing the ego. That was the
Mhm.
hardest thing for me. For me, it was important to be right all the time. That's
Mhm.
just who I am. I don't
Yeah.
like losing. I don't like feeling
Most
right.
traders don't like losing. That's the
So I
thing.
had to detach myself from my losses. So when I
Okay.
took a loss, I didn't consider it personally. You know, I considered,
Mhm.
oh, it's just part of doing business.
Okay. And now I see you in the Discord. Would you say you're more of a scalper, a diamond hand holder, or do you have a certain style that you like to trade?
Well, I don't know what you consider scalping in forex, but probably more scalping than holding.
Mhm.
Just
I
because
think
of my person.
in futures, I'd say scalpers are like 1 to 2 minute traders.
Yeah, that's me.
Okay.
And I just don't have the patience to hold it. It's just my personality. I need instant gratification.
You want to see that green instantly?
Yeah.
So do you use the lower time frames for most of your plays, or do you look at higher time frames, or kind of how do you spot your setups, indicators, price action, things like that?
When I first started trading, I was only on the 15-minute chart, looking at the hourly and
Mhm.
the 4 hour for support and resistance. And then as I developed as a trader, I went to the 5 minute, and then eventually I ran into one of my mentors, and he taught me about the 3 minute chart and how good that is.
Okay.
And then if I'm really in a hurry for before work, I'll go down to the 1 minute and trade the 1 minute because I can get in and out quickly.
Yeah, you basically click the button and click the button again, and you're done. Yeah, I love
Yeah.
that. Yeah, it's such a rush trading the 1 minute. Every time I go down to it, it's just I'm in, I'm out, I'm in, I'm out. I love that.
Yeah.
Now I'm assuming you were trading all personal capital back, before you worked for a bank and kind of right after it. Is there a certain time where you kind of discovered prop firms and kind of what drew you to BluSky specifically?
Actually, I was one of my friends that trades. He has his own trading company where he teaches traders how to trade, and I learned about prop firms through him. And I just
Okay.
happened to pick out BluSky and came to your website. And I had tried a few other ones, but I wasn't impressed with them. And then I really fell in love with BluSky and decided to stay there. So
Yeah, and I obviously I'm a little biased because I am part of the team, but being able to trade news, the daily payouts, the unrealized drawdown, even before I was part of the team, is something that really, really drew me to BluSky because I feel like we are very trader friendly and try to push you to brokerage. And now, kind of wrap it up. I mean, you have a great story. I could sit here and talk to you for hours, but kind of to wrap it up, now that you've been in the industry or the space for so long and you've probably seen so many traders come and go. If you had advice to somebody kind of starting out that, can maybe pass evals, not get a payout, is kind of stuck in that break even zone, do you kind of have any advice? And it could be anything. It could be mindset, it could be technical, just to kind of help them push over the edge.
main things, don't over leverage. That'll kill you every time. Brokers love it when you do that because they
Hmm.
make money.
Yep.
Um, but I would say keep your leverage low. I try not to risk more than 2% on any trade, 2% of the account. So if you're trading like a $4,000 in margin, then you don't want to risk more than say $100, which is about 4%.
Mhm. So that's a good question. You brought up risk management. if you say you bought a brand new 50K eval, the profit target
Yep.
is $3,000. What sizing would you be using, and would you be using micros or minis?
I typically start with micros, so I'm trading one micro for every $1,000 of account
Okay,
value.
so you'd be using 3 micros on that to start.
A maximum, yeah. Sometimes I'll start with one and then scale into the trade. Just depends
Okay,
on
and then as your
how
balance
the
goes to
market.
4, you can go to 4, and then 5, you go to 5.
Correct. And when I get to and then every 10,000 I add another E-mini.
Oh, that's a great way to put it, because I feel like a lot of people just kind of hop into it and they want to get, that instant gratification, instant results. But if you really do it properly, like you said, and build the account, the size follows and the money follows, and that is great advice. Well, that's all the time we have. Affluent Mind, thank you so much for coming on the podcast. I cannot wait to see this air. And if any of you guys are in the Discord, he's always willing to help. I've seen him, give advice to everybody. And now that I know he's been trading since 8 years old, I can see why. So once again, thank you so much, and we'll see you in the server. Now, I don't know about you guys, but I enjoyed that interview so much. The fact that his parents bought him a video game about trading options at 8 years old, man, no wonder he's profitable already. If I was starting to learn how to trade at 8 years old, I don't know. I wouldn't be on this podcast. I'd have an island somewhere. I'd be chilling hard. Did that blow you guys' mind? Did you guys even know there were video games out there for trading?
My kids play Minecraft at 8.
Right?
All I know is I
Lucky.
want to meet those parents and give them a hug and a gold star.
Yes.
Like that is,
I feel like I'm
that is
slacking.
amazing. Like, that is
Yeah.
amazing. In fact, I'm gonna go tell my kids they're not getting any toys ever again.
Yep.
Yeah, that's their Christmas present is a
It's
video
gone.
game about trading.
We're canceling Christmas in 26.
So
It's
cool.
gone.
I would have preferred that than playing Ages of the Empire.
I know, right?
Now, hold on,
Yeah,
hold
I
on,
wasted so
hold
much
on.
time playing World of Warcraft. Now, I love this job as a podcast host, because I would have never met a Fluent Mind if I wasn't doing this. And I love these conversations, trader to trader. It's one of my favorite things. Now, going into our next segment, which used to be my favorite segment, now it's the interview and a trader. I have questions from real Blue Sky traders. If you have any questions you want actually answered, DM me the coaches. We'll feature your name if you want to say it, or we don't have to say your name. This week, nobody wanted to be featured. They just want to know these answers to these questions. And we're going to start with you, Coach Becky. This is a great question, and I'm kind of curious about your answer. When traders break prop firm rules, is it usually a knowledge problem or a discipline problem? And I think I know what you're going to go with.
Well, I absolutely love questions. So hit us up anytime. I know all of us coaches do. But this is a great question. And I think if we're all being honest, we know the answer. I think in the first year, it could definitely be technical. You could not have a strong enough strategy or fully understand the technicals that went into a strategy and mismanage a trade. But I think by and large, it's definitely discipline, especially when it comes to officially blowing an account. I mean, that doesn't happen in one trade in general. And if it does, it's a discipline problem still, because you're over leveraged. So, I mean, I think the way that we can mismanage our discipline is multifactorial, right? If you're trading too big, or if you're engaging in revenge trading or over trading, all three of those behaviors will blow an account in a very rapid time if you let it. And so I definitely think locking into your plan in terms of your size that you're going to trade, the amount of trades that you're going to engage in, and what you need to see and enter a trade is really the powerful way to, let an account take some time, whether you have a red day or green days. Like, it shouldn't happen all in one day. That's not the ideal outcome, because that's not really steady trading. And so I have to go with the harder answer, which is discipline, because that's, a personal impulsive choice to manage, versus technical. You can study and, shore up a little quicker, I feel like.
Absolutely. And I knew you were going to say that, because that's the right answer, right? Now, follow-up question. You mentioned multiple things. In your mind, what's the one small rule that traders think is harmless to bend, but usually costs them their account?
Just one more.
Just one more over
trade.
trading.
Just one more contract. Just one more. That is the slipperiest phrase in like a whole lot of parts of life, and definitely in trading, I would have to say.
Absolutely. That's a
Saying
great
one
answer.
time in trading is the worst habit of all time.
Just one more trade. Just
one
more
time.
trade will fix
Just
it.
one time. The amount of things
That's
that
a
go
lie.
wrong to get there.
Yeah.
It's called tilt,
cute.
ladies and gentlemen.
Yep. And you know how many times I've said that? Just this once. I won't do
I
it
can
again.
say
One
that
time.
and with a 5
Just
second
once.
turnaround, because I've done it. That's why.
Hey, Justin, as an
Exactly.
Guilty.
analytical person, if you have to say just one time, what happened to the other times?
100%, 100%.
Yeah.
That's a great answer, and I learned something from it. But now on to you, Coach Matt. Next, this
Yeah.
is this is good for you because I know that you trade a lot of different instruments.
Mhm.
So this is for a new trader. How should a new futures trader decide which market to specialize in?
The one that's pumping gold. Go. Like, why make it hard?
Not silver.
Like, what are we
Just
doing
buy
here?
gold.
Do you want easy or do you want difficult? I've always felt like easy's better. But there's a lot of traders that prefer difficult, so go trade crude oil. Um, Listen, though, in the futures market, there's only a variety of different instruments, right? That's one of the things that you love about futures and you love about Forex is, unlike stock where there's, 4,000 stocks that have some degree of liquid options. I love it as a swing trader because there's always a trade, but oftentimes it's overwhelming when you're talking about that much depth in the market, and even going from one stock to the next can be a little overwhelming and trying to firm up your own opinion. But in the futures arena, I mean, are you going to trade the ES or the NQ on the index side of the equation? Because that's 99% of futures traders. Like, let's spot check the Russell 2000 and the Dow Jones every now and then, but it's really an NQ versus an ES conversation. At BluSky, I would say, 80% of the people are on NQ and
At least.
19% are on ES, and that's me and like 7 other dudes. Like,
Becky.
oh yeah, Becky's on my team too. Becky's
Yeah,
on
me and Riz
ES.
are degenerate NQ
Riz
traders.
is a cheerleader for the
Yeah.
NQ crowd. On the index side, you're going to pick an index because you want to focus on an index and you want to master one of those. Trading is a lot of its behavioral analysis, and understanding what the NASDAQ is versus what the ES is might seem like a subtle difference. But go talk about the favorite ES trade or the favorite NQ trade with 2 ES and NQ trades. They'll argue with one another for the next hour. And so I think you got to pick an index. I prefer the ES, especially for newer traders. The ES, like veteran traders, love the NQ because of the volatility. That's the exact same reason why new traders probably should start with a little bit of training wheels on. And so I would say new traders more on the ES than the NQ, but again, dealer's choice there. But I would also say, okay, give me a commodity because sometimes the indexes are boring. You know what was boring during Fed Day? The indexes. You know what wasn't? Commodities, currency. Like there was other things out there. So I think you got to look at some of the metal classes and be like, hey, do I want to trade GC? I think people who don't understand the power of intraday trading on gold probably just never have done it. Honestly, gold is one of the best day trading instruments out there. And so I'd say pick a commodity, but I would start with the indexes, then go to the commodities. And ultimately, as you get bigger and better and badder and you have more understanding, you get a bigger arsenal. And so, yeah, I like a lot of different asset classes. I like a lot of different strategies because I believe in diversification, but not from a all eggs in one basket perspective. The diversification I believe in is different asset classes on different time frames. And so, putting gold on every different time frame allows me to get some diversification.
Now you kind of answered my follow-up question, but would you say master one of the, either the ES or the NQ before moving on to something else?
Mm-hmm. I would. Trading's done in the short term, but it is a long-term game. Like it is a long-term game. And you got more than enough time to spend some time with your favorite asset called ES. You got a lot of time that you can start building onto that foundation. So, I would start with the ES, and I would spend some time with it before I moved on from it. Get comfortable with your primary tradable instruments, get to know them like the back of your hand, and then once you do, add on top of that. But yeah, I would get comfortable. There's absolutely, I'd get comfortable with the instrument.
Great answer. And I don't know about you guys, but I started with ES and then somebody introduced me to NQ. I never turn back
You
because
know,
that
some
it
people
doesn't get
start
the
with
blood pumping any
marijuana
more
and
than
go
that.
into cocaine. Like,
I don't want to say it, but
Wow.
yeah.
All right.
And we went there.
You want
Okay,
to do
guys.
volatility
All right.
analogies. I was just going down the road. That's all.
All right.
Yeah, no, I think that's a
Some
great
people
point to
like to
stop with
party,
Coach
some
Matt
people
and move
don't.
on to
By
Coach
the
Riz.
way,
Let's go.
the cocaine was the NQ in the analogy. I just wanted to make sure.
Yeah, I think we all got that. And last but not least, Coach Riz. This is a great one because I remember we talked before, and the reason you got into traders was because it is a 23-5 game. So, for new traders, which trading session gives the best chance of consistency?
You know, that's an interesting question because, I think it's more so when do you have time to trade?
Great
Because
point.
it's not about, you can find a trade any time of day. You can find a trade morning, day, and night, but you have to be able to have that time that you can sit there and just zone in, look at the chart, take your trades, not be on the phone, not be doing other stuff because you're working. When you show up to work, it's time to work, do and put it in. Now, if someone were to ask me where you can find probably the easiest trends you could trade, I'd like to think that the after hours offers that. You can lean in with a larger lot size, and you don't have to worry about algos, news events like you normally do in the New York session. Now, if you're short on time and you want that instant gratification, the New York session is there for you. The volatility, the manipulation, the algos, the news, everything happens in the New York. But if you're a novice trader trying to get your feet wet, I definitely recommend looking at the after hours because it is slower. Gives you time to process the move and decide what you want to do. And of course, stick to sim trading. Start off with sim and then get yourself that eval so you can start breaking open that seal.
Great answer. Great answer. And just like you, I got into futures trading because I was not able to look at a computer during the 9 to 5 time. So I had to learn during the Asia session. I think learning during the Asia session is great because it translates into New York rather than just hopping right into that crazy volatility. But great answers. And guys, I cannot stress enough, if you have any questions, please message me, one of the coaches. We will get these questions answered for you. But that concludes our Ask a Coach session and this episode of Market Skycast. And it's been great talking with you guys. And as always, we will be here next week. If you have any questions or concerns, join the server, ask us up. We are on all major platforms. Make sure you like and subscribe, comment. Let's keep this thing going. And until then, stay profitable.
Take care.